All right, good morning, everyone. Okay, that's better. All right, I'm back. Hope everybody had a good Christmas, having a good Hanukkah, the whole story. All right, let's jump into it. We've had a hell of a few weeks, a couple weeks of rallies. I think we started the month, we were down a couple thousand points on the local exchange. We are now up about 1,000 odd points. So we've had a hell of a rally. The U.S. has obviously kind of led that charge. You can see last night, Friday was kind of a bit of a non-event. But we did have 50 record closes so far in the year, and then Friday was pretty much about flat. We've also got this week, we've got a lot of data out. We've got U.S. home sales, consumer confidence, jobless claims, manufacturing data, and just kind of starting to wind down the year and look forward to the following year. So Asia, we saw a bit of mixed action. We saw Shanghai that's actually pulled back at the end, as well as the Hang Seng. They were up earlier in the session, but we did have the Nikkei and the Australian market and everything, and the Kospi higher. So we've seen a total breakout in the U.S. dollar yen, kind of above that 104 level. It's been a nice move. I saw Dennis Gartman on Thursday or Friday calling for that to be the trade of 2014 that continues to work. And I think he's probably right. And I think, like we've talked about before, that's going to continue to be a return to normality, to what we used to see when markets were kind of, not crashing or recovering from a crash. So, all right, no market data to speak of today. We've got industrial production out in I think it's Scandinavia. We've got retail sales in Spain. We've got Italian business confidence as well as PPI. And then we've got U.S. home sales and Dallas Fed manufacturing later. Nothing really big today to pay attention to in terms of market data. But and I think that we'll kind of be, the markets will kind of be on a drift, and I would assume we'll have a strong finish to the year, which will happen, which will be tomorrow. So just keep that in mind, that we've got year end tomorrow, and that's going to obviously probably be a little bit manipulated on low volume, and probably to get certain stocks to really get a good strong close to the end of the year. All right, let's jump into the maps. First thing I want to have a look at is what I think is probably one of the most important charts in the market at the moment. That is the U.S. 10-year Treasury, which you can see there. We did actually spike up above this 3% on the yield on the 10-year Treasury 2 sessions ago. We're kind of right at it at the moment. Let's have a look. So we're right at 3 exactly at the moment as we speak. But really what we're looking at here in my mind is a real continuation pattern from kind of the lows of this sort of trough that we traded down to in late October and early November, as well as what we've kind of held as we tested earlier in July and August. So we kind of been in this some sort of a little narrow consolidation pattern here, but we had a little bit of a breakout as of Thursday or Friday. I think we're going to be able to break out to the upside, make a nice little continuation pattern here above 3% on the yields. And in my mind, I think it's going to take us all the way to 3.5. To me, that is what has put so much pressure on the Rand. That'll be our next chart that we'll have a quick look at here. The Rand is really taking a beating again, and it's not just the Rand, it's all emerging market currencies. We've seen that same sort of scenario. And we've kind of really just had this ascending wedge or ascending triangle here that we've broken out of. You can see there on a closing basis, we're above 1050. We've never closed above 1050, and so this is really important. And we continue to make higher and higher highs against the dollar and lower and lows against for the Rand. So this is very important in my mind. I think that we probably will continue to see this take place as yields move higher in the States. There's only so you can only be so willing to buy emerging market currency or emerging market debt with such dramatically higher risk than some of the local or than some of the main market paper, the U.S. and the U.K. and Canadian and that kind of thing. So that's what's really putting pressure on interest rates here, and obviously in turn the currency. All right, let's look at copper. Copper's also made a nice little breakout here. We're going to work off the close here. This thing's very wicky, but you can see on a closing basis here, we've really had this kind of tiny little descending trend line over the past, 9 months on the copper price, and hasn't been able to get above at one time. We've totally broken out of that, and we actually are at the highest prices since early April in the copper space, and I think that's really important. It's important that that's happening after we've seen the taper. I think it's very bullish for markets returning to normality. I think it's obviously bullish for the miners in general as well, because I think people were nervous. The miners, you saw the miners kind of not get involved in the rally that followed the tapering. We finally got some rally on Friday out of those shares, Thursday and Friday out of those shares, obviously boosted by the weaker rand. But I think this has more room to go in my mind. We're breaking up nicely through the 200-day here. To me, this is a total breakout in the copper price, and I think we can go higher. So keep that in mind. I mean, I think a mining space has been a dead space in South Africa, which is, historically has always been the biggest part of the index. I think that could be coming back into some sort of favor. I think our market could see another leg up because of that. All right, Naspers, we're looking here at a 30-minute chart, 30-minute, 30-day chart. What I want to really show here is just kind of the breakout on a little continuation play. You can see, obviously, we did spike to 1060. It happened in such a short amount of time that even here on looking at 5-minute bars, it only really gives us up to 1050. But quite clear here to me when we broke out to the upside here, we kind of popped up to 1060, consolidated back down here around $1,000 and pushed back higher. I think this thing can trade up to 1100 in the next 2 or 3 sessions. I just don't think there's that much to stop it. To me, we seem to kind of be moving a little bit toward the 1998, 1999 technology bull period here, where look at these tech stocks in the States and kind of globally, they just seem to rally every single day. I mean, Naspers essentially is a tech stock following Tencent around. Tencent's been up I think it's been up every day but one over the past 20 sessions. You're looking in the States, looking at what Twitter's doing, $41 billion market cap, hasn't made $1 of earnings. These things, we're starting to feel a little bit like those tech boom days, although I would say it's still early tech boom days, so just keep that in mind. Old Mutual, you can see they're breaking out a flag pattern here. We had a lot of these stocks that are kind of shaping up in these flags. Some of them have been faster to get there than others. Mutual finally broke out there on Friday's trade, and then the last one I'm going to show is Trueworths. This is really significant to me because you can see here 76, which is really our major level. We've come all the way back down here to test 76 again on Trueworths, and look at how many days we've touched this. 1, 2, 3, 4, 5, 6 days, almost 7 or 8 days here. Call me a liar for 50 cents, but this is incredible that we've kind of just pushed down and pushed up against the 76 and haven't broken down or haven't been able to bounce up off of it. I would say the longer that we sit there and build at 76, the likelier we are to break down from this pattern, because of the fact that that's it's the path of least resistance, the direction that we have been going. When you kind of consolidate like this and you can't get a bounce for a period of a week or two, these things tend to kind of resume the direction that they were doing. And if it breaks below 76 on a closing basis, I think it could get quite ugly here. So just keep that in mind. Retailers really just trading like absolute garbage over the past few weeks, and with the rand blowing out like this, and interest rate pressure starting to come because of what's happening in the U.S. 10-year space, I think that it could persist for a little bit longer. So just keep that in mind. And that's it for today, guys. Thanks a lot.